and in fact we managed to shut shop at the day's high, which was, well, saying only 12 odd points. It was a very range bounded trading session today that we did see. The small cap index was the only spot of outperformance that we saw, 0.2% higher for that one. But all in all, if we had to talk about the big Nifty losers and gainers, I'm going to quickly go through that. It was the metal space, all in all, that was the biggest loser. Vedanta dragging the market down, almost down by 4%, followed closely by Tata Steel, which was down 1.6%. But otherwise, among the big gainers, it was the energy basket that really powered ahead. GAIL, RIL, NTPC and the 3 OMCs as well as ONGC were among your top Nifty gainers. But here's an interesting story that is developing as an aftermath of the entire SL Group problem. It looks like even mutual fund holders, and precisely speaking FMP holders, now are bearing the brunt. So what exactly is the implication of the SL Group gloom on FMP investors? Let's go across to my colleague Jayesh to understand that. Jayesh?
First and foremost, let's start with what is an FMP, which is the fixed maturity plan. Well, it's a close-ended debt mutual fund that investors can invest only during a specific time period, and the rate of return, which is the most important to an investor, that is on an indicative basis based on where the 10-year yield is. Now, what had happened yesterday is that the Kotak Mutual Fund announced that they are in fact delaying the payment of the FMP that they had. What they have done essentially is prepaid the principal plus a part of the interest that they were supposed to pay. Some of it has been held back in terms of units. That is because they have investments into SL Group and the ILNFS transportation network as well, wherein they have in fact declared 100% provision for the ILNFS investment, but they are at the moment working closely with the SL Group to recover their dues, and as and when they get their payment, they will in fact repay the investors as well. But later in the day or in the evening, HDFC Mutual Fund also announced something similar, because what they have gone ahead and done is they have extended the maturity date of their FMP by about 380 days to April 2020. Now, why they have done that is they have cited reasons of the existing interest rate scenario as well as the current positioning of the portfolio, but they have not disclosed what the current positioning of the portfolio is, which group companies they have exposure towards, and where is it that they are going to get their dues from. One fund after the other has declared this FMP issue, which has caused some bit of concern in the mind of debt investors.
All right, Jayesh, thanks a lot for that. In fact, to talk a bit more on this, we earlier caught up with Lakshmi Iyer, the CIO, Fixed Income and Head Products of Kotak Mutual Fund, and who better than her to explain the entire situation. Let's listen into what she had to say.
The total outstanding debt is in the ballpark region of about 13,500 crores. This is for the Z promoters, of which mutual funds are holding, in a combination of open-ended and close-ended schemes put together, close to 7,000 crores. And all of these are with 8 asset management companies, including Kotak being one of them. So firstly, we're not the only one, there are 7 others with us. The thought process was always, make no mistake, always was to protect the interest of the unit holders. If we would have invoked, which we had a choice, to invoke the shares, sell off and realize the proceeds and give the entire money back to the investors, that could have been a possibility. It wouldn't have made headlines, but it may not have protected the interest of the unit holders, because I would not be 100% certain how much of Z I would have recovered from the sale of shares. The 2 fixed maturity plans that we returned the money have returned principal plus some returns. Yes, the portion of Z has been retained back, which will be returned in principal plus accrued interest on or before 30th of September as per what we've communicated to the unit holders.
Well, that's what we are going to be discussing right here at 5:30 on the Money Show, especially with all of this that's happening. The question is that as debt debt mutual fund investors. Should you be worried? What exactly are FMPs and how do they differ from your regular debt mutual funds? And you need to know, of course, all the risks and returns, of course, associated with debt mutual funds. So we'll be discussing all of this at 5:30 p.m. Don't forget, if you too are a concerned debt mutual fund or a debt FMP holder, you can send in your questions and queries. You saw the number flashing on your screens and it will be answered by our financial expert today at 5:30 p.m. Alright, well, it's election season, it's earnings season as well. Tomorrow we are going to be having Infosys deliver their fourth quarter numbers. The ET Now poll suggests a dollar revenue growth of 2.3% at a little over $3,000 million, and the rupee revenue is expected to be up only 0.3% on a sequential basis on account of the currency fluctuation. So that's seen at 21,465 crore rupees. The margins are just about seen mostly flattish at 22.2% versus 22.6% seen in the previous quarter, whereas the net profit is seen growing 9.6%. One key factor to watch out for, of course, is what's going to be the revenue growth, both in dollar as well as in CC terms, and of course, what's going to be the cross-currency movement or impact rather as well from Infosys. But that's of course about earnings. Very quickly, shifting focus to commodities, where NSE's gold contract has been very, very sluggish. It's moved below 32,000, the mini contract that is. And additionally, the Qs as well from the US gold market has been very sluggish. It's come in below the $1310 per ounce mark. Remember, we did have the FOMC say that they are going to maintain a dovish stance, but since then, gold prices have corrected significantly. Perhaps you could attribute it to the fact that trade talks seem to be making headway between US and China, and Brexit as well seems to have been delayed to October. So that is something that one must watch out for as well. Okay, completely out of time on this edition of Business Prime Time. So ladies and gentlemen, thanks so much for watching. Of course, stay tuned to ET Now for all the election and earnings news and updates.
Thank you for joining us. What should we start with, Samir? Your view on politics, your view on Bollywood, or your view on Nifty?
A third is a view on
Nifty.
Nifty. Well, they're all, well, I don't know about Bollywood, but the others are all connected to each other, I would think. Or both are connected to each other, at least in the very short term, which is 1 month. But if you look slightly longer, you tell me that if we knew today that BJP is winning, or we knew that Congress is winning, other than the fact that you may have less or more stocks, but the stocks that you will own will be more or less the same. So actually both of them are similar in their market impact in terms of sectors, I think. But of course somebody may say that if BJP loses or gets less seats for a few days or weeks, the market will fall 5-10% and things like that. But beyond that, the stocks that you will buy will be same, whether it's this government or any other government.
Did some data, and that according to the data in last 15 years, foreign institutional investors have turned net sellers only 3 times. Financial crisis, trade war, and tapering tantrum, which happened in 2011 and 12. So if the data has anything to go by, looks like irrespective of the election cycle, foreigners, they love to buy Indian stocks.
No, over time, of course, because they, we are a sort of a proportionate part of the pool, and the pool keeps increasing with time. And generally, when the rest of the world is up and the portfolio sizes are up, then also that needs allocation a little bit to come to other markets. So that I agree totally. But it's only that we are talking right now of a very specific 1 month kind situation where the disappointment can happen or not. But after 3 months, I think it will not matter. I agree with you entirely.
Is it justified for bulls to ignore the level of crude, global growth scare, which is what is forcing Fed not to increase rates, and the fact that the run-up in banks and the Nifty from the recent low is about 10-11%. So do you think this market will continue to climb the wall of worry, or it's time now to take real serious cognizance of where we stand and where valuations are?
Well, the thing is that there is this hope that we all have that this year will be different, that is 1920, whether it is only for the fact that many of the financial sector stocks, basically the banks and the corporate banks, will suddenly have significant, on paper, increase in earnings because they will have gone from having a lot of credit losses to zero or much better that and less NPAs, and therefore the aggregate earnings will look better. But if you break that down to say whether these are real, continuous changes or are basically a change from a loss to a profit, say for many state-owned banks, then it's a normal 10, 12, 15%, 12% earning kind of growth market rather than the 20 odd that it will look top down for the year 2019. But what that does is that makes our valuations, when people look at aggregate numbers, a little bit more reasonable. So that's why I don't think this is like the hottest time of our history to invest in the market, but it's a reasonable time, which means that you broadly hope that over time the 13, 15 actual sustainable earnings growth will come into prices, and maybe some stocks are overvalued, but the overall market will be sustained, A, by the fact that aggregate earnings growth will look higher, and B, generally the world is good, and so we will be plus minus a little bit, following the world or the emerging market world.
Okay. Samir, since we're just a month away really from the election verdict, let's try and assess the situations. What if it were to be PM Modi again re-elected as PM? Would you say that the best is already in the price, or can the market be meaningfully higher than what it is currently at already, around 11,600, 11,700 thereabouts?
So what happens from today to May 23rd? But in general, my feeling is that after May 23rd, you'll have at least a month of a correction.
Irrespective of the outcome?
Yeah, irrespective of the outcome. And maybe it goes up for 2 more days and then it falls. That reason for me is I think that the money flow that is coming from FII is an event playing money rather than money which is trying to be here now for ever. Because if you're a regular fund, and you did not come for the first 2 months in which, if you remember, India was massively underperforming, and then you suddenly want to come in 1 month and have stock prices go up 10, 15% and still buy. I think that is, there is that big pool of money which plays events around the world. And that money then moves on to the next event, leaving the rest of the investors who are, buying for a 1 year, 2 year, 3 year horizon, but they don't take things or decisions so fast, or they don't pump in money in, 15-day period census for a long time. The only issue is whether they have slightly more seats or slightly less seats. So it's not going to be a super massive surprise that BJP has come in. And broadly, we know their policies and we know which sectors were benefiting. So it's not that there was some pending reform for as far as the stock market is concerned, which gets triggered from day 2 of the new government. So it's more of the same, which everybody liked or has liked, and therefore it'll just move on in a normal sense rather than a massive surprise or the market bursting with like 10-20% rally because this government has come back. Because it won't be a surprise.
Yeah, somewhere it seems that the market is already betting on it, like you rightly said. But what happens thereafter then, Samir, once that correction plays out? In retrospect, are we going to say 11,700 was the best for the year? Or do you think after that correction plays out, it will be shallow in nature, would be bought in a jiffy, and we will see higher highs in the remainder of the year?
We don't know so much about all these things. Broadly, the only angle I have in my mind is my net, by the way, is very high. I am not prepared for a big correction myself. But that's what I feel right now. And therefore, I feel that if nobody increase their weight from today to 2 months, it will not make a material difference. That's all that I mean. So, in that sense, you can say it'll go up 3% and then fall 6%. Maybe it'll be immaterial, but you can afford to wait. That's all I'm trying to say.
Samir, one sector that you've continuously been harping upon is banks, is where you're finding value. I believe there's now interest in select PSU banking stocks. What's the story here?
Well, I don't like the word harping because I've been for 25 years or 22 years in these banks. In HDFC Bank from its IPO, in Kotak since 2001, and in Indus since 2009, and all of them. The thing is that the private sector banks, you have actually initially the universe reduced in the last 3-4 years, as you then concentrated only on the retail banks. But in the last 1 year, we have all moved a little bit to corporate banks, which basically means Axis Bank and ICICI Bank. And now somebody can go beyond and even buy one state bank or two, a state bank, state-owned banks, and even it's all your comfort and your history that would you want to buy a one price to book bank because it psychologically makes you think that you're buying value, or you are comfortable with more of the same, which is what we have in HDFC Bank and Kotak Bank, where they're not material changes, but they never disappoint you in bad times of the market or the economy. So it's a mix and match, but we've also bought one on the basis that the illusionary profits will look high, and there's a market even for illusionary growth.
Samir, that these valuations will not sustain and they should crack?
Well, actually, we define consumer very broadly, but I would think that consumer is the only hope left. If you look at both the manifestos, it is clear that there is no choice but to pump money to rural India, to farmers, because basically you are asking the farmers to subsidize urban India. Low inflation for agricultural output basically means that you are effectively asking the poor farmer to have lower output price, and since it's basically an internal transfer of wealth, you are giving it to the rest of India, or basically to urban India. So I would think that is the other way around, that there will be less growth in infra and other things because there's limited amount of money, and both the governments will, either of the two, whoever comes in, and subsidies and universal income or whatever. But broadly, I don't think that the theme of consumption will go away. You can move a little bit from urban oriented to consumer. Even we consider auto, at least the commercial, the non-commercial side of auto as